right, hello everyone. Welcome to the last midweek update ever for 2022. Just kidding, just for this week. We are going to end the year on a very interesting note. We'll talk about it. Not much to really go from when it comes to these markets, but hey, let's end it out. Let's see what we can do and get ready for next year. I'm excited for that. I've got my 2 cents. We're going to share some trades. We'll take a look at some stuff. You know the drill. Take responsibility for it. So where's our Santa Claus rally? That's what I'm looking for. We've talked a lot about it. It was something, we had a ridiculous stretch going. I think it was the last 7 years we had a Santa Claus rally. But then I had some discussion with the boys around the office, and they said, well, we've been in a bull market for 4 or 5 of those years. So it was pretty obvious. But we'll see. I have seen a little bit more pessimism. I've seen some pretty decent and aggressive selling in these markets and had to keep checking back to that VIX over the last few sessions. I'd say the end of last week and then today has been a little bit bearish. We'll get to the live markets here in a little bit, but so the diamonds are in a pullback so far. That's what it looks like. The spiders look like they're consolidating, although recently it looks like it's breaking down and the Qs are approaching lows. So 3 different types of markets, and we've been talking about this for a while. Hey, take a look at the sectors. Let's see what's outperforming, what's underperforming, things of that nature. But as of the last few sessions, we're bearish. I mean, it's, well, you guys can make the judgment call when we get there. So I'm just going to say the sentiment is flat to bearish over the last little bit. And economic data is actually showing signs of slowing, which raises an eyebrow because of worries of slowing too much. We always talk about how the Fed is a little bit behind the 8 ball. They're too slow. They're too fast. They're doing too much. So the first signs of that, the PCE number, and the CPI, those numbers are all over the place. As soon as they start to come in line or show some slowing, you got to take the foot off the gas. And Powell and the Fed says, no, we're not going to. But then, we've got this target inflation rate of 5%. And now it looks like, oh, geez, it might be at 3%. Maybe we did too much, which causes even more fear. So the selling will continue. It's going to be pretty interesting to see what happens the first of the year. I'll come back around, first of all, and explain myself a little better. First of all, let's take a look at our trade ideas. This is from this class, AKRO, still holding in. Gold, I thought, was pretty interesting as something bullish, and then RTX. Now, when you take a look at these charts, it's more of, okay, they moved higher. Now, AKRO, folks, came from sideways, and I moved it up to the bull side because it did exceed back above a resistance level. Now, you could still play it sideways. You'll see the chart in a minute. Deer, Schlumberger, moving to the neutral area, but are showing signs of rolling over. You'll see here, I'm going to get these numbers, but they're a little bit off because the markets have been steadily selling off since I started building this class. On the bear side, it's a pick'em. I wanted to show the ones we talked about last week, Mosaic and Blackstone, which are doing excellent, by the way. Great work out there for my bears. For you who just threw some bears out there and forgot about it, you're doing great. Awesome work. I wish I was there. I'm not. I'm sitting on my hands until the beginning of the year. Apple's breaking down. Costco, Amazon, everything you can think of that was strong and the darling over the end, or I should say the recession, the pandemic and into that are really just not doing very well. So let's jump into some charts here. This is AKRO. We discussed this last week as a revisit to the sideways side, and I actually still like it as a sideways trade overall. You can see this is the range that I had it gap down and kind of retrace. I think we're talking about it now right around this candle. Now it's exceeded that a little bit, which is why I kind of bumped it up to the bull side. I also like that it's a healthcare and it's in the biotechnology. I don't think this thing is going to go off to the races. In fact, you can see the candlestick today. And in fact, folks, go out and take a look at some of your bulls. I went through our lists, our older lists. Philip Morris, Starbucks, some of these things that were darlings here, Procter & Gamble, Merck. Pull them up and you'll see that they're doing great, but they all have big red juicy candles today. And I just think it's a general sell-off going into the end of the year. Now you might think, oh geez, Joe, you and Corey and Rob, you guys have been talking about tax implications. That's one thing. General fear of what could happen in the first quarter would probably supersede that. So hey, I don't want to spend 4% in taxes by selling it, or whatever your tax obligation is by selling it at the end of the year. Do you want to take a 10% loss in the first quarter? I'll pay the taxes. So maybe that's kind of what we're seeing. I keep bumping back to the VIX, and I'm not seeing any fear. This is just a general roll-off. And for all I'm talking right now, by the end of this class, we could be back up. Or we could be down 300, 400 points today, and tomorrow put 400 points back on. That's just how this works. So I'm not really buying into too much, especially with only 3 days left in 2022. Move to the other one that I thought was pretty cool on the bull side. A couple of reasons with this too. It's also gold. I keep pulling up gold for the week, and it's always just slightly up or slightly down, 0.16%, 0.18, 0.2, 0.005. It just doesn't really do much. And you can see it's been slowly chopping higher. So this might be just kind of a safety net, just to stick some capital in there and just hedge yourself off with whatever trading you're going to do at the beginning of the year. If the Fed's too aggressive and the markets take it bad and things fall apart, or the Fed takes their foot off the gas and the dollar falls, this is going to run. So this might be a nice little counter lever or a hedge to an overall account based on what you guys are trading. Interesting, right? Okay, so moving on to our last bull, and take it for what it is. This is more of a sideways as well, Raytheon, but we've had this up on our bull watch on and off for quite a bit. You could play it bullish. I like it sticking right around the 100 mark. So if it more consolidation, you got resistance here at 102, right at 98. I might have just said the exact same thing last week, but it's still bouncing within the range. Kind of a optimistic feel to it, if you will. It's in the right industry. It's a little bit more defensive, but I am seeing a lot of those defensive sell-off as of today. So it's a very difficult kind of call for the next few days. So let's go to the sideways stuff. And this is Deer. This came up on our sideways last week, and I like it. It still looks great. It's awesome when I can get to this class here, folks, and literally just replace the exact same chart with this week's. It just shows that you guys are picking good trades, and they're continuing to be good trades. So we're within a range. This is sideways. I still like it sideways. If you're too tight with it, you might be a little worried because it is bleeding off. It does have support at the 420, a little lower if you want to get specific. However, I would not be surprised if these markets put in a green day. I've seen weirder, right? So we'll see if this selling continues throughout the rest of the day, or if it's a race tomorrow. Very difficult to trade. But if you're white enough, this could be a good potential sideways trade. Let's go to Schlumberger. This one's doing the exact same thing. It's got its red candle for the day, just like the rest of the markets, I should say. But this also has this little ominous flag pattern here that it's broken above. So I do like that. It's showing a lot more strength than it has been since the November with this flag pattern. But flag patterns are usually a sign of reversal to the upside. So these last 4 days, we'll call it, could be showing signs of that. It's just having a little bit of a rough go this morning. If you want to get very specific and forget all about that nonsense, keep an eye above that 50-day moving average or its 20-day moving average. That's probably the last line of support before this thing might fall back into its flag pattern. But I do like it sideways, right? Sideways. On the bear side, you guys knocked it out of the park with Mosaic. We talked about it as a descending triangle pattern, and you guys were correct here, and you guys were correct there, and guess what? Came back up, touched its resistance, and we are being correct all the way back here. Awesome job. I don't know. I just can't toot your guys' horn enough. These Mosaic's been on the bear for weeks, and every time we talk about it, it gives a trade, and the trade works out. So I like it again. Another one too, Blackstone. I like this one as well. Discussion was to the bear side, and boom, guess what? It is to the bear side. Here's the first breakdown. Comes back. We thought it could retest this. It didn't. It just consolidated at the 75, and it is now rolling below its last lower pivot that it set before the holiday, before Christmas break there. Well, I think that was Wednesday when we had that little gap up. Yeah, the Wednesday. Now, if you guys recall, Wednesday I was saying, hey, I would not be surprised for us to come back and close flat and move higher, and that was not the case. That's not the case, which is why I'm not trading. It's why I'm not trading right now. It's because I have these calls of, oh, I could see a Santa Claus rally putting us back up to some levels, and we're not getting it. It's more of a consolidation. However, today, oof, for my bears out there, great work. Great work. You're looking great. So let's talk about another one. This is Apple, another darling that was doing really, really well, and it is now at some pretty big levels here. This is where it broke its first level, and it fell pretty quick. This was one that we don't talk about often. I didn't. I missed it because it moves so quick. I was cruising through some of the picks that we had over the last 4, 5, 6 weeks actually, and this was on the chart. So we were talking about it somewhere in this area, if at all. But it did come back. But boy, look at this breakdown below the 130 mark. It's not looking very good. This is one that I expect to be weak going into next year as well. I truly think that there's still a whole lot of meat left on these bones. A lot of people don't see that, but you take a snapshot of the weekly of some of these, and there is a whole bunch of meat on these things. These things have been rallying not just for the over the pandemic or the COVID thing, but they've been rallying into it. So it's been a couple of years. All right, let's get into the market analysis. That's just a review of some of the traders' trades and picks that we've been talking about and that we've had over the last few weeks. So the market performance, this is going to be off. That the diamonds, and this is tough because it was yesterday's action. Monday was closed, and then half of today, or I should say today about an hour ago, 35, 40 minutes ago, we'll call it. Now those numbers could be skewed, so I apologize, but you can see we are moving south. The Qs is leading the way. The diamonds, the Dow is also falling. It was actually positive this morning and is now triple-digit negative. So it's a pretty substantial move lower. We'll see it here in a second when we go live. Russells are falling, but oil really fell off the docket, but I see it bounce back and forth. Oil seems to be pinning itself below 80. I've seen it mid 70s and then back up to high 70s, so it's trying to pin right around 80. And then gold, it just hangs in there. It doesn't do anything. It just, when we have these big up down days, it just stays pretty steady. So I kind of like it as something you guys might want to put on the side burner as a nice little hedge, depending on how bearish or bullish you guys are. So that's kind of it. Let's get into the overall charts, and you can see that the SPY completely sideways, and I don't know what this candle looks like now. However, look at this. That's ominous. And we've been talking a lot about the longer-term trend, and Corey makes a great job of mentioning it over and over. Sometimes I get a little bit carried out or focused on the micro, but we are still in an overall bear trend. Yes, this whole move is still a big bear rally in the grand scheme of things. So I got to make sure I keep bringing that up because I focus on the little things like this. And keep in mind that if I was to keep in mind that this was an overall bear move, then I should have my portfolio exposed as such. But it does look like it's starting to slip. The volume's really not there. I didn't expect it to be there because we are in the holiday season. I think the most of the institutions we talked about last week or previous week has hedged themselves out, and they're probably gone. This could just be a whole lot of last-second positioning. Last week, remember, folks, I said it's a pick'em. You go out there and you kind of speculate, what do I expect for the beginning of the year? Do I want to be in or out? And that's kind of what we're seeing. So I do expect a push and pull to continue, even though right now we're getting a pretty good pull down, right? So we'll see how far that goes, or it'll be interesting to see into the close of today if we're really just falling apart or we regain everything. Now, if we really start to fall apart, then it might be worthwhile to see about some sort of corrective action going into the last couple of days of the year, and that would really map out, okay, am I a -2? But if we recover all the way back up and we close flat for the day, I'm a zero and I don't care, and we'll talk out on the second, right? That's where I'll start to look. So let's move to the diamonds, and you can see it's more of that bull pullback. It's still holding on to its 50-day moving average. A little bit bearish if a candle today, but it is definitely in that bull pullback that we talked about before the first slide. I'll get going here a little quicker. And then the Qs. Sell off, consistent, slow, and steady. It's not a panic. It's just I want out of these. I did see some rotation, so we'll talk about this real quick. Now, during this slide, that was when the diamonds and the SPY were kind of moving higher. So I was saying, oh, they're taking it out of the tech and putting it into some of the other stuff. But this last slide, I'm not seeing anything being put back into the markets. The Dow pulled back, the S&P's consolidating. There's a little bit of movement here, but it's not like, oh, I'm taking all of my tech portfolio and putting it all into finance. I'm seeing a little bit more selling without a lot of reinvesting over this last few days. And that could be the fact that this isn't really institutional money. Rob talked 2 weeks ago, or the last time we did the weekend trade up, that you're going to get a lot of retail traders here. The bigger firms, smaller, not gigantic institutions, but smaller retail firms, you're going to get a lot of traders on their phones, things of that nature that could cause moves like this. All right, so let's get to the economic report, and there's zero out there. I mean, look how small that is, but here's what we had. Closed for Christmas, trading goods. We've got, well, I guess that's just going to be our debt or the trade difference, and it's reducing, so obviously we're doing all right there. Case-Shiller Home Price Index, they're down a little bit more even, so home prices are sliding. I was reading an article today about that. There's still home purchasing going on. It's mostly cash. Don't know where the cash is coming from, but I mean, it's significantly slower, but there's still homes being purchased, and they're mostly cash. So we're seeing home prices start to drop, and that's completely in tangent with interest rates increasing. Then we have got the pending home sales. There, that just kind of adds to the topic I just finished there. You can see down another 4%. What do we got left? Nothing. Jobless claims. That number has been strong. So we're expecting actually an increase in jobless. Last report we didn't. We're still holding jobs. We're not getting as many claims. So if we see this number start to tilt south or increase, that also shows that, okay, what Powell's doing or whatever is slowing the economy. Not a good thing when people lose jobs, but it does show slowing. And then the Chicago PMI, I'm not going to be around for any of this. There's just really not going to be any sort of follow-through. So even if these numbers are bad, you've got a day and a half to trade before the end of the year. Not much to do between now and then, except for maybe watch if you're really, really bored. And I don't get that bored. All right, folks, I went ahead. I'm going to go ahead and pull the class, but I just wanted to let you know because I'm already here. Below the 20, below the 50, I'm zero because I haven't bought into this move to the downside. I really want to because it would really confirm our longer-term bearish trend. However, if we recover all of this or tomorrow we go down 400 points today and up 400 tomorrow, that washes. Now, my monthly outlook I put to negative 1.5 because I believe in that long-term bearish trend. I believe in some serious roadblocks if we do come to the point of the recession, or if the Fed has raised too aggressively, or companies are reacting to their stock prices falling. So I'm expecting nothing but a slowdown, and that will echo directly into the markets. So there's my opinion. Usually I ask you first, but there's only a handful of us on today, so I figured I would do it a little differently. So let's go ahead and pull the class. Go ahead and launch. So you guys can see how the poll is going right now. 100% voted. Didn't take long because there's only, a handful of us here. All right, I'm going to close the poll, and I'm going to share it. Okay, and as you guys can see, we are definitely to the negative side. 90% negative, 20% negative too. So it sounds like we're sitting at pretty much the exact same spot. All right, hopefully I didn't lead. Sometimes I like to pull the class before I give you my 2 cents, but I think we're all on the same page. Cool. Thanks, guys. Let me hide it, and we'll get going. So let's get into our sector analysis. And it's more of the same. It's pretty much what you would have expected. Last week, technology was the leader. Energy was the weakest. This week, energy is the leader. Technology is the weakest. So last week we had a little bit of that bump up. Remember, I said, oh, it looks like we're going to have that Santa Claus rally. But what it was the inverse. It was just a little bit of a breath before an exhale, and that's kind of what I'm seeing in this situation. So let's break it down here. Now this is from Wednesday to Wednesday. It's a little bit more, but even then they're both missing one trading day. Well, actually we only missed Monday. So technology smushed right now. It's probably going to be a little higher than that if you guys when we go check it live here in a second. And then energy, utilities, financial even outdoing consumer defensive. These numbers are probably going to change. I mean, we've had a pretty good push to the downside as we've been talking. Let's take a look at the charts here. The first one is energy, and it doesn't look very good, does it? Even though this is the outperformer, you have a bearish crossover and a kiss on a moving average that could easily just roll right over. Now, you do have some saving grace back in here if you guys think that energy is going to hang in with the markets overall correct. Now, I know 90% of us believe in a -1 to a -2, which would mean everything's going to sell off. And this would also, or it would consolidate. But if I was going to choose a bear side, I would get into the leader of the bear stuff, the stuff that people are trying to dump. And that would be tech. Had a little bit of a hiccup last week when we talked about it, or that last little right before the midweek, I should say, and then it just bled lower. It does have a little bit of support here down at the 120, which it could sit there and consolidate for a while. But I do think that individual earnings on some of the larger high flyers, I mean, geez, you guys have seen Tesla stock lately. You know that's a big chunk of the market. So is Apple. Some of these numbers that go by a little slowdown in some of those larger companies, it's really going to have a massive impact on the Qs. So they're not as diluted as they should be. So there's plenty of meat left on that bone to be ripped off. So let's do a quick conclusion here. There's always movement into the end of the year, but it's subtle and specific. So I'm seeing these big moves, and we can go check the heat map. This is just a general push to the downside. We could get a general move to the upside. Anything that is going to be institutionally driven is going to be subtle and very specific to a sector or a stock. It's caused by mostly window dressing and first quarter speculation. Whether that's I want out of this company before first quarter is ended and the fourth quarter is talked about, or I want into it. So that's all this is. We talked about it 2 weeks ago. I said pick 'em. It's basically you're rolling the dice, you're guessing. So it's all speculative or window dressing. I think the window dressing was done. I think it was done actually the end of last month. This is mostly just last second push pull stuff. Think of it as last second shopping for Christmas. It's the last second before 2022 ends. We are seeing a little bit more selling than buying. Today, it's a lot more selling than buying. Overall, that chart does seem to have this bearish or ominous move to the downside. And to once again say it, Corey did like to make mention of it, and I'll do it again, that we are in a overall bearish market. Expect some push and pull over the last 3 days. I really will be interested to see if there's an answer to this bearish move, whether either today or tomorrow. But we've only got 3 trading days to see that. So flat and mostly due to the holidays and year end. The volume is super light, but low volume can create volatility with directional action. Meaning, if everybody sells and there's not that many people there, it's going to look drastic. So economic data is slowing. I think that the worry of inflation is gone. It's now focused on is it too much? Are we too aggressive? Are we going to fall into that recession, or can we have that soft landing? I think that's what the focus of the sentiment will be going into next year. We already know that there's going to be some weak numbers on some of the businesses out there. We know that's already in there. I do think that's priced in, but it's the longer term recession worries. Are we going to have a soft landing or not? That will probably be the focus, at least for the beginning of next year. And we'll talk about it in the year-end review, right? That's going to be a fun class. And by the way, I don't know when that is. Keep your eyes on the calendar. All right, let's go out and see what's going on. And okay, we got our first turn, but you could see it's a specific sell-off out of the gates. I mean, this just dropped straight down, all of them. The Dow was up about 100 points, and now it's down 250. Still under 1%, right? Right now it's just they're down about 1%. We'll see if that's just going to be a little bit of a bounce before it rolls over, or if it's going to come all the way back or consolidate. I don't know. You can see Apple, big part of that, right? Tesla's having a little bit of a bounce, but overall it's a general sell-off. Okay. Let's get into anybody that wants to say a trade, and I don't think we do. So if we don't, I'll bounce around a few and cut you loose. Okay, 2 weeks ago we discussed AR. All right, Felix. Oh, good. Yeah, let's take a look at AR. And he's wanted to give props. Said nice trade. I like it when we have nice trades in this class. So let's take a look at it. I'm gonna zoom in. Oh, yeah. Oh, it is. Let me go to my post-it notes. That's right, folks. You know I do post-it notes. Yeah, there it is on the list. That was on the same list as Blackstone and Bank of America, or BAC, right? But look at this. Nice. Starting to roll over, fall apart. That might be one if you guys want to put on a list. I'm probably going to keep our list empty, and it's the end of the year, and it'll be fun. I'll do this with you guys moving to the end of the year. We're going to do fresh scan. I'm throwing everything away. We're going to start fresh. Do some scans. We'll take that weekend class, carry it forward, and we'll start building. Well, I'll call it. I'll start rebuilding my new post-it notes. How's that? Okay. Yeah, not sure if I should take some. No, no. Hey, this is when you see a move like this, Felix. Folks, let me just tell you what I read. Felix says, "Hey, this looks like a great trade. Not sure if I should pull some profits out of it, or let it play because it's down to 31. I would let it play. If this is indeed going to be the sentiment, it's one of these things where it's bearish. It's still in a bearish situation. Even if it regains the majority of its candlestick today, it is still in a bearish situation, right? It comes back up this 20-day. Oh, right. And then, hey, we're right. We get the push and pull. It's going to be more of a consolidation into the end of the year. That's fine. But it is still in this beautiful downtrend. It's still testing these levels here. I guess it's a little bit of a symmetrical triangle, but boy, if this just continues to roll over, I would be very comfortable holding any bear right now. I'm upset because I don't have anything, and I have gone through some of the bearish trades that I abandoned or just didn't take, and they're all great. So if you're in them, take advantage of them. I wouldn't worry about year end. I wouldn't worry about any of that. Just see it'll carry over. And here's why. You and I are making trades for diagonal spreads or vertical spreads or week to week or month to month. We're not putting in 6% of my portfolio is bullish to AR, and I need to worry about that moving into next quarter or the quarter after that. I'm fine carrying trades over the year end. I'm fine with that, especially if the trade's working for you. So, good question, though. I mean, it's fair. Thoughts on Tesla? Yeah, we'll take a look at Tesla. That's a fun one. Is there any more room to the downside? Yeah, tons. We just can't see it. Well, maybe let's do this. Okay, there's a weekly. Let's go monthly. There's some perspective, So here is our pandemic year, and Tesla goes from 20, $30 to 400. I don't know why, but now it's rolling back down. There's some moves made by the company, by Elon and all this stuff, and worries about this has turned more into a tabloid than it has a company. There's still massive overvaluation, absolutely. This stock can go all the way down to $80, and it's still doing amazing for a car company. All this other stuff up in here is the speculations of him starting a space program and buying and absorbing Twitter and expanding into like 12 different types of companies and making trillions. And so, yeah, this has come back down. The answer is absolutely it could. It'd be super hard to do on a day-to-day because of the overextension. I mean, the first thing you'd probably want to see is a massive relief rally and then maybe sell into that. But right now, it's a little tough, and it's super volatile because he's a tabloid, right? Stocks in the news are very, very difficult to trade sometimes, but it'll be fun to watch. Keep an eye on it. Well, let's take a look at what was another one. Amazon was one that I had on the list, but I didn't get to show you. But since we don't have anything coming across the boards, we'll just take a look at that. See, I almost showed this one. I liked it, but I liked Apple a little bit more because this is just slowly bleeding off. What were some other ones? Oh, I'll show you these. So here's PG. Great bull chart. Looked awesome, but then look at today. Just a little stop. And that's a big old candle. I'm going to zoom in on it. It just seems like there's just some profit taking going on, or just some pretty general selling. Here's MRK, and these are stocks that I'd be okay being bullish in. Not today, but it just shows you that there's some pretty good selling going on. There's some pretty good selling on, and then once again, this is on my bull watch. I like it as a bull trade. Interesting. Well, let's take a look at Starbucks, because that's one that I was toying with. It's one that I really like longer terms, sideways, and it's still holding under its bull pullback. Looks like it needs to get back above 100 to be comfortable, but that could easily hit it and roll back down. So yeah, we're all sorts of, I don't know which way do we go. We'll have to see what the general market thinks, but there's some pretty good trades out there that will be ready once I could get people back to work. Does that make sense? Yeah, I'd like to see the institutional money back. I'd like to see everyone back, but it's hard to buy into a lighter volume, at least for me. Those are my 2 cents. All right, I'll cut it there. I knew this was going to be a literally small update. We didn't have too many days to talk about. So that's it. So one last check here, and then I'll just cut you loose. All right, so it looks like we're having our first bounce. Don't put too much into this, guys. Just keep an eye on that. It'd be interesting to see if this comes all the way back up and touches this, then rolls back down, or if it just rolls over right now, or all I know, maybe we go all the way positive. So it's just too early to tell. It would have been cool if this happened yesterday. Yesterday was absolutely flat, right? We didn't go up or down. We just blah. This is the first time I'm seeing involvement. In this case, it happens to be to the bear side. So we'll see if these bears can hang on or if they're going to flip-flop. All right, guys. Nice job. Fun time talking to you guys every Wednesday for 2022. I'm looking forward to 2023. If you need anything, you know how to get a hold of us, and we'll talk to you next time. Bye, folks.